Hi everyone, Scott Schweiger back with another Tuesday tax tip. Last week we passed the SALT and talked about state and local tax deduction workarounds that the states are currently passing left and right. This week is a reminder that the Employee Retention Credit was available for 2021 and you can still claim it. Now, this is an interesting and valuable credit, and it was lost in the fray of pandemic relief early on since you initially couldn't claim the Employee Retention Credit and get a PPP loan. Then you could, then they extended it, then they extended it again. One of the interesting parts is that the Employee Retention Credit is a lot more valuable in 2021. Plus, it's easier to qualify for. So, a quick comparison. For 2020, the max credit was $5,000 per employee based on a percentage of their wages. For 2021, the max is $21,000 per employee. That's $7,000 per employee per quarter if we want to break that down a little bit further. And those are per employee totals. The more employees you have, the more valuable the credit gets. Keep in mind that any wages attributed to PPP, restaurant revitalization credits, or similar programs won't be eligible for the Employee Retention Credit. In general, there's no double dipping on using the same expenses across multiple pandemic relief programs. Eligibility is also easier in 2021 versus 2020. There are two main ways to qualify and a bunch of variations contained within them. The primary way to qualify is to have a full or partial government shutdown. So if the federal, state, or local government comes in and tells you to close up shop. But this also works for things like capacity limitations, which would be a partial shutdown. The other main way to qualify is to meet the gross receipts test. I know, sounds kind of fancy, right? But basically, if you saw a revenue drop of 20% compared to the same quarter in 2019, we're going back 2 years now, then you qualify for that quarter in 2021. It's actually fairly straightforward, but there's also alternate quarter methods to calculate the revenue drop, plus other methods to qualify in general. So I would consult with your CPA, tax pro, payroll, or HR professional to determine if you actually qualify for the Employee Retention Credit. You can only claim the Employee Retention Credit for the first 3 quarters of 2021 unless you're a recovery startup business. So basically, if you started your business after February 15th, 2020 and meet a few other conditions. Okay, so how do we claim this thing? Well, that's a pretty good question. Technically, this is a payroll credit. So you're going to claim by filing amended 941s with the IRS for the period that you qualify. Now, you could have been short paying your federal tax deposits and filing Form 7200 along the way, but if you're at this point in the video, that's probably not you. And let's just note that in normal times, the IRS takes 16 weeks to process those amended 941s. And in case you haven't heard, the IRS is, well, behind. So this isn't some quickly processed refund to help with immediate cash needs. So that's the Employee Retention Credit in a nutshell. Obviously, how this tip will impact you depends on your particular set of facts and circumstances, like if you have a business with employees and if your business meets the eligibility requirements to claim the Employee Retention Credit. If you have specific questions, please reach out to your tax advisor or feel free to contact me. Thanks for watching. I hope you join me next week for another Tuesday Tax Tip.